that my base case leans towards the bull run that we saw in 2013, which was that it went up in two very distinct phases, right? So it went
Right.
up very quickly, then it had a really sizable correction, long correction, then went up another run up. Whereas a lot of people looking at the 2017 bull run, which even though there were 30% corrections, there was none of that gigantic prolonged corrections. And so I think so far this is playing out like 2013. A lot of the on-chain indicators still look reasonably bullish. We still see ongoing adoption, which somewhat differs in those previous bear markets. And so that looks healthy. So overall, my case is that the bull market is probably still on, and that Grayscale just kind of accelerated it and then pulled that acceleration back. But that
Yeah.
still remains to be seen. We have to see what happens with macro environments because now these ecosystems are big enough that they can be impacted by macro events. It's kind of like how if a small tech stock is growing, they can pretty much
Hmm.
grow regardless of economic cycles. But once they get very big, they become more directly tied into the economic cycle. And I think we're seeing that to some extent with Bitcoin and maybe Ethereum and some the broader spaces. One thing is we never, if you look at most on-chain indicators, we never got as euphoric in this cycle as we got
Hmm.
in the previous cycles. And so if you're comparing it to that absolute top, it's basically less of a a kind of a retrace to get back up there. But then two, as this the halving cycles get less important, right? Because it used to be years ago that that the new supply of Bitcoin was still pretty meaningful. And so when that
Right.
new supply got cut in half, that's a pretty big supply shock for the existing supply demand balance at the time when that happens, and then going up the next the year after that, the 18 months after that. But as they get smaller, that becomes an increasingly small percentage of supply in the market. And then in addition, I mean, now we have, if you look at the North American miners, a lot of their plans are just to hold whatever Bitcoin they mine. And so overall, we don't really have a ton of new supply from mining on the market. And instead, it's really about going through weaker hands that maybe bought, didn't understand what they owned and then sold it, overall trading volume. And you're kind of comparing that to this underlying accumulation volume from people that either don't sell or rarely sell. So I
Right.
think as now that we have more institutions in the place and now we've gotten bigger, I do think that these cycles could shorten and soften potentially. My overall view of the model is that I think it's going in the right direction. I think that focusing on the stock to flow ratio and specifically Bitcoin's increasing stock to flow ratio is a very useful way to look at it. And then also, it basically those halving events matter. And so
Right.
part of my shift from being kind of neutral on Bitcoin to bullish on Bitcoin was seeing charts like that kind of woke me up and said, okay, actually there's a clear pattern here. When you look at the logarithmic price chart, a lot of people fall into the trap of looking at the linear price chart, and it always
Hmm.
looks like a bubble. Whereas if you back up and look at the logarithmic price chart, that gives you kind of a more calm analysis of what events maybe led to some of these price run-ups. And so I do think that his conception of the stock to flow ratio, especially as it relates to the halving events, is really important. Now, my case for a while has been that I'm not relying on a specific price target from that model. I think that model is useful for indicating direction, and I think that the underlying kind of idea is sound. But whether or not that specific prior algorithm that he calculated will continue to fit remains an open
Yeah.
question because a
Yeah.
lot of that was back tested, but then it continued to be pretty accurate since he launched it. And I think the question is how long will that continue to be accurate? I think another way to look at it is the demand model. And so Jurian Timmer from Fidelity, he's their macro director at Fidelity. He often posts like a combined model that has like the stock to flow model on it, but then he also has this demand curve of adoption. Um, and so generally you see Bitcoin's price kind of bouncing around those two. And so the stock to flow ratio gives you more aggressive kind of price targets. The demand model gives you a little bit less aggressive price targets. And so I think having both of them on a chart with price tends to be helpful, is how I look at it.